Hi friends, DK this side. There are several types of mutual funds that are available in the marketplace. And choosing a right one is always a challenge for a person. How to choose a right fund is the matter of concern for majority of the youngsters in the country. The answer is very simple. You should choose a mutual fund which is aligned with your financial goals. Ultimately, investment objectives are guided by the financial goals which you have set in for yourself and your family. So in this video, we will learn how many types of mutual funds are there. What are their characteristics, which will help you to understand the several types of mutual funds available in the marketplace, and then you can probably better decide to choose a right one which suits to you. Friends, do not forget to like this video, subscribe the channel, hit the notification bell for updates. Let's begin. So let us understand the basics first. Mutual funds come in many varieties. They are designed to meet the different investors' goals. As I said, the financial goals of the investors is very important, and accordingly, one should choose the mutual fund. So mutual funds can be broadly classified on the basis of, number one, the organizational structure. Some mutual funds are open-ended, some mutual funds are closed-ended. Second is the management of the portfolio. Some funds are actively managed and some funds are passively managed. The another category is on the basis of the investment objective: growth, income, and liquidity. Another category comes as underlying portfolio. That is, it could be a mix of equity, debt, hybrid, money market instruments, or it could be multi-asset kind of funds. Then the theme-based fund. It could result into achieving your tax saving aspect, retirement benefits, child welfare, or arbitrage. Another category is exchange traded funds known as ETFs. They are traded in the stock market just like any other stock, but they are mostly based on index funds or the gold ETF. Then there are overseas funds which invest in the markets other than Indian stock market. It could be in US market, it could be in Hang Seng Index, it could be any other markets in the world. So these are the broad categories of the mutual funds under which they can be classified. Let us understand one by one. What are organizational structure-based mutual funds? Number one, they are open-ended schemes or closed-ended schemes. What are open-ended schemes? Very simple. They are open for subscription. That means you can buy or sell the units of that mutual fund at any point of time at the prevailing net asset value or NAV. While the closed-ended schemes have a fixed maturity date, units are only open for subscription at the time of initial offer, and they have a fixed maturity date where you can redeem your units and get back your money. Since closed-ended schemes have a fixed maturity date, they need to be listed on a stock exchange so that if any investor want to exit before the maturity, can sell out his units in the stock exchange. Now let us understand the scheme classification by portfolio management. Under this, we have two kinds of funds. One is the active funds, another is the passive funds. Now, active or passive terminology is used because in one fund, the fund manager is active, and so it is called active funds, where the fund manager in fact decide which underlying security is to be bought or sold at which point of time. Another category is passive funds, where the role of fund manager is very limited. The role of fund manager is, in fact, is a passive nature. And so it is called passive funds. In this kind of fund, we know the very popularly ETFs, exchange traded funds. So the investors here take a call to buy and sell the units held by him in passive funds like ETFs in the stock market. Now, mutual funds are further classified on the basis of investment objectives, because different people have a different investment objectives. So mutual funds offer the products that can cater the needs of different people and meet their investment objectives of the investors. So some investors want to invest money in the mutual fund for capital appreciation. That is the growth of their capital. Some people may want to preserve the capital. Another person wants probably to have a regular income from the mutual fund. There might be a people who have some surplus money and want to park in the mutual fund for liquidity. And there might be a people who want to choose a mutual fund for tax savings. So in the financial market, we have n number of mutual funds available to meet the requirements of the investors or to meet the investment objectives of various kinds of investors, depending upon their investment objective, risk appetite, etc. If your investment objective is to appreciate your capital, then you will have to probably choose the equity-based mutual fund. Because historically, if you check, the equities are considered to be one of the best asset class. They have not only beaten the inflation, but they have outperformed the many other asset classes. If you want to have a regular income, then you have to choose the income funds. They invest in corporate bonds, they invest in debentures, government securities, etc. But if your aim is to have a liquidity and you have some surplus fund, then you can choose the money market mutual funds, where you can park the money for a shorter duration. Whenever you need money, you can liquidate and get the money back. So mutual funds are very powerful investment tool. It offers variety of products in the market suiting to your risk appetite and investment objective. If your risk appetite is high and if you want to really appreciate your capital, probably the best choice is equity mutual funds. If your risk appetite is little lower and mediocre, then probably you can choose a balanced fund, which has a mix of equity funds and exposure to debt funds in a certain ratio. If you have little knowledge about the growth story of a country's economy, and if you're bullish about India's infrastructure story, you can choose the sector-based mutual funds that invest in infrastructure sector or auto sector or maybe financials. If you want to park money for overnight for liquidity because you have some surplus money, so you can choose the money market instruments to park the money. What I want to emphasize is choosing a right fund is very important. Options are available. The only thing is you have to first define your financial goals, find out your investment objectives, which is in line with the financial goals which you have set in for yourself and your family. And then accordingly, choose the right fund mix which will achieve your financial goals. I hope, friends, this is a small presentation on mutual funds and the types of mutual fund might have given you enough insight to further study about the subject. You can even visit the site of the MFI, Association of Mutual Fund of India, for further details. Thank you very much for watching. Do not forget to like the video, subscribe the channel, hit the notification bell for updates. Looking forward to meet you very, very soon.